So the numbers, the Dow was up 2.5% on the week. NASDAQ 3.6% on the week. Russell 2000, 2.8, and the S&P as well. Gold stocks got hit. Gold was down 2% on the week. It closed at, let's see, 3,240. I think something like that. Let me take a look. Yeah, 3,241.60. And, I heard a lot of talk. That's it. The bull market's over. Blow off top, right? Finally, it's over, right? It was too speculative. There was no speculation there. Yes, it got a little hot for a few days. And now it's come down.
In today's news recap, gold rebounds from 2-week low, U.S. jobs data in focus. Gold gained on Friday as investors rushed to buy the metal a day after its prices hit a 2-week low amid receding trade tensions, while the market's focus shifted to the U.S. non-farm payrolls report due later in the day. Gold hit its lowest level since mid-April in the previous session and has lost nearly 2% so far this week, the steepest weekly fall since late February. U.S. gold futures rose 1.3% to $3,263. There have been softening stance on tariffs, and situation has improved a bit, but still there are a lot of uncertainties, so gold will still be preferred by investors, said ANZ commodity strategist Soni Kumari, adding that every price correction in gold is seen as a buying opportunity. If prices continue to decline and approach the $3,000 level, it could attract a lot of investment demand. Beijing is evaluating an offer from Washington to hold talks over U.S. President Donald Trump's 145% tariffs. China's Commerce Ministry said, although it warned U.S. not to engage in extortion and coercion. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
It's way above the prior resistance. So it's a massive breakout of the price of gold. And it wasn't a bunch of speculators that were buying gold. In fact, the public was selling gold stocks all month, even during the rally. You were getting net outflows out of GDX and GDXJ. And they certainly weren't buying physical gold. I mean, the phones weren't ringing off the hook at Schiff Gold. I mean, it picked up a little bit, but really not much, because the public is mainly selling their gold. We have a lot of people, I've talked to other gold companies, people have been calling up to sell their gold because they need the money. And now they can get, a higher price. And so they're making a mistake. They should keep their gold, sell something else, because gold's going to go up. But it wasn't a bunch of speculation. But, this was a risk on week. People were thinking, aha, the worst is behind us. It's not going to be as bad as we thought. Yeah, I'm going to buy some risk assets and I don't need a safe haven. And so you got selling in gold. You got buying in tech stocks. You also got buying in Bitcoin, right? Bitcoin was up about 2.5% on the week too, in line with the NASDAQ. And, just before this week, I was hearing a lot of the Bitcoin guys, because Bitcoin didn't get clobbered when NASDAQ, had its final leg down, because it kind of led the decline and then kind of bottomed out. And then the NASDAQ kept falling and Bitcoin went sideways. And everybody was saying, aha, you see, Bitcoin is finally decoupled from the NASDAQ. It's no longer just a proxy for tech. It's not a risk on. It's more like gold. It's more risk off. It's more a safe haven. And of course, none of that was true, because Bitcoin traded nothing like gold this week. It traded the opposite of gold, and it traded in lockstep with the NASDAQ. So that's really what it is, right? Bitcoin is like the NASDAQ, except why buy Bitcoin? Just buy tech stocks, right? If you want to buy a safe haven, if you're worried about inflation and dollar depreciation, then you buy gold. If you want to speculate on the direction of the NASDAQ, just buy tech stocks. That's better than buying Bitcoin, because eventually Bitcoin is going to decouple from everything and just go straight down. So, eventually tech stocks will go up and Bitcoin will go down, right? So you're better off, if you want to speculate on tech, don't do it through Bitcoin. Just buy the tech.
In today's news recap, Chinese investors slash gold futures positions by 1 million ounces. Key trading insights as gold prices surpass $3,500. According to the KOBEC letter, Chinese investors reduced gold futures positions by approximately 1 million ounces on Wednesday night, marking the third largest reduction on record. This follows a significant buildup of 1.2 million ounces on April 22nd, highlighting sharp shifts in trading sentiment. The adjustment coincided with gold prices briefly exceeding $3,500 for the first time, suggesting a potential profit-taking phase or risk management strategy among large-scale traders. Such large moves in gold derivatives may lead to increased market volatility and influence short-term price trends. Traders should closely monitor open interest and volume changes for potential breakout or retracement signals. The cryptocurrency market has been buzzing with indirect implications following a significant move by Chinese investors in the gold futures market. On Wednesday night, May 1st, 2025, Chinese investors reduced their gold futures positions by nearly 1 million ounces, marking the third highest reduction on record. This dramatic unwind comes just weeks after these investors added a record 1.2 million ounces to their positions on April 22nd, pushing gold prices to briefly surpass the $3,500 mark for the first time in history. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
The administration keeps talking about how well these negotiations are going and how they're very close to these great deals, these great trade deals. And the markets are taking that as, okay, great. Maybe the trade war is going to end. Not that, these trade deals have the potential to actually deliver anything other than relief from our own tariffs. Because I don't know what it is that we're trying to win, because most of the countries that we are negotiating with have very low or non-existent tariffs right now. In fact, in most cases, our tariffs are higher than some of their tariffs, right? So, what are we, are we going to end up lowering our tariffs more? And by Trump's own definition, would that be a win for them? I mentioned South Korea. I forget if I mentioned in the last podcast, but that's one of the countries that, we're close to a deal with South Korea. Well, their average tariff rate on our stuff is 0.75%, not even 1%. So what are they going to do? Drop that to zero? You think that's going to move the needle? You think a 0.75% average tariff rate is what's causing our trade deficit with South Korea? Our tariffs, before Trump jacked them way up last year, our average tariff rate on their goods was 3.3%. So, we got higher tariffs than they do. But this is pretty much the same with all these countries. There's really not much to gain from tariffs going to zero when they're not at that far from zero right now. But I don't even think that any of the deals we're going to negotiate are going to mean no tariffs at all. Maybe there'll be a little bit. Trump talks about, in his advisors, the non-tariff barriers. And I don't really know what can be done. They claim that the value-added tax is a non-tariff barrier, but it's not. They just completely misunderstand how the value-added tax works. One of the other non-tariff barriers that Bessent keeps talking about is foreign exchange, which is also one of the hypocrisies, because I saw him interviewed, and he specifically said one of the ways that the world is cheating us is by undervaluing their currency, that their currencies are too low. So in other words, they're helping to make the dollar stronger. And that's how they're cheating. But in the same interview, almost like one sentence away, he was asked about the strong dollar policy. And he said, absolutely. We have a strong dollar policy. Okay, well, if we have a strong dollar policy, and he not only said that we have a strong dollar policy, he said he wants a strong dollar. Well, which is it? He's criticizing our trading partners for helping to keep the dollar strong in the same breath, really, that he says he wants a strong dollar. I mean, how do you have a strong and weak dollar at the same time? Right? You can't say that it's unfair that we have a strong dollar when that's exactly what you want. Now, what he really wants is for the dollar to weaken, right? If he thinks that the strong dollar is a problem for us, and that's the reason we have these trade deficits, then why do we have a strong dollar policy? Why don't we just come out and say we have a weak dollar policy if he wants a weaker dollar? Because he can't say that. Because if he says we have a weak dollar policy, we're going to get a weak dollar even faster, which is going to be a big problem because we're trying to sell our bonds all over the world. And those bonds are denominated in dollars. Who wants to buy a dollar-denominated bond if our policy is to weaken the dollar? Nobody's going to buy them. Well, we need people to buy them. That's why we have to have a strong dollar policy. But then we can't blame the strong dollar for our trade deficits. We can't say the rest of the world is cheating because their currencies are undervalued when it's supposedly our policy for the dollar to be strong. Now, maybe he has some new definition of a strong dollar, which means it's actually a weak dollar, and it's a weak dollar that we decided is a strong dollar. I don't know. But that's the only really non-tariff barrier that he's identified. Now, I believe that he's going to get that. We're going to get a weaker dollar. And in fact, I mentioned that the stock market has recovered pretty much all of its post-Liberation Day losses, but the dollar has barely recovered. I mean, it was up a little bit on the week. The dollar index was up about 0.5%. We managed to finish, I think, slightly above 100. Remember, the low was below 98. So we have had a bounce in the dollar, but it hasn't, come back to where it was or even close prior to Liberation Day. The same thing with Treasury yields, which rose on the week again. The yield on the 10-year Treasury is 4.3. Remember, it was below 4 on Liberation Day. And the 30-year is at 4.8. Remember, the highest we got on those rates was just over 4.5 on the 10-year.
What do you think of Andy Schechtman's call for gold surpassing $4,000? Is he spot on, or do you see things unfolding differently? Do you think we're finally entering that explosive bull market he's been predicting, or could this just be another peak in the cycle? More importantly, are you stacking right now? Are you positioning yourself in physical gold and silver or exploring mining stocks instead? Let me know your thoughts below. I'm reading every single comment. And remember, stay vigilant. The financial landscape is shifting fast, and opportunities like these don't wait. Now check out this video right here, and I'll see you on the other side.